Good morning, traders. It's Pete here, and this is Trading Kitchen. Welcome back. This will be my last video before going on summer holiday, which will take me out from the screen for about 2 weeks, I suppose. In this video, I will speak about trigger. I already did that, I know. You can find a very good video about triggering the market in my YouTube. But it seems like a lot of you guys are having trouble with the trigger. That's what I know from my Discord group, in which I will suggest you to join in. It's totally free. You have backtest, you have all my trades, you have my pre-market ideas, you have free course volume, lots of footprint stuff, lot of stuff. Okay, very, very useful. It's totally free. You have my Notion template. Anyway, it's free. So in this video, I want to give you 99% mechanical. It's not a strategy. It's a trigger, basically. Okay, a tool, a way to trigger, which is very, very, very powerful. It's a method. Okay, very, very powerful method with which to trigger the market. Okay, and I will prove that without knowing any bias, skill concept, any structure, skills, any narrative. Okay, only with this method you probably will be profitable. Okay, market is fractal no matter the time frame, so adapt all this stuff that I will tell you right by now to your trading style. Okay, I use it for to scalp. So basically I use this for 1 minute structure and 15-second time frame to enter the market. But if you are a swing trader, you can use it on 15 minutes, for example. Okay, so using, for example, 4-hour time frame for the structure for bias, and 15 minutes with 15-minute time frame to trigger. Anyway, listen to that. So I know a lot of you guys are good with valley highs, valley lows concept, etc., etc., etc. Well, I decided to use the same indicator that you use. I will show you later which one, but you already know that. So you can easily identify valid highs and valid lows. To be honest, is not the primary thing to me. Okay, is the logic behind very important. So what is a valid high and valid lows? Basically, they are two level of price in which we have a clear how can I tell you, a clear decision by the market. Okay, so a clear program. We have a valid high when basically in this area we have a lot of a sufficient bearish pressure, okay, that broke a recent low that create the higher high. Okay, so this means basically the same thing. Means that we are here, inside here there is a huge selling pressure. Okay, value lows, the same thing on a bullish way. Okay, so there are two very important levels in which we can concentrate to find our trigger. Okay, so this yellow line and green line that you see, it's a green line that I draw like this in a live market. Okay, so I made this kind of thing. Okay, and then I move like here. Okay, so this represents the market. You have valley high, valley low, valley high, valley low. Then you have a ranging market. Then we take the recent valley high, we weaken it like this okay? And doesn't mean that you have to see the wick, because the wick on 1 minute time frame is an engulfing on 50-second time frame. The logic that is behind the wick is we take the high, we trap it, this buyers over there and over there, okay? We grab this liquidity, so valley highs and valley lows are for me liquidity point, liquidity level to sweep, okay? And we strongly push the market down, created a new structure in which we broke the recent valley low, okay? So this is, to me, the best way in which market is telling me that we switch from a bullish program to a bearish program, okay? ICT said that. So when I see this, okay, I'm ready to trigger. Obviously, I tell you before that I will do this backtest with you guys now without knowing any narrative, any bias, etc., etc. But obviously, we are talking about this thing only if we are inside the POI zone, inside a supply and demand zone, inside 50% of the previous range, etc., etc., etc. Okay, but we are not talking about this right by now. If you want to know how to identify the right zone to do that, I already made a video. Okay, you can find everything on my YouTube, obviously. So now the reason, the thing is, how I trigger the market right by now. So we have a valley low that swept the recent valley. We had a valley high that swept the recent valley high, and created a new valley low, or basically new low, because we don't know if this is valley low when this will get broken, but we don't care about this. What we are supposed to know that we are inside a bearish program. Okay, so what does it mean? It means that inside here we have bearish volume, basically, okay, a strong bearish pressure, and we have to trigger here, somewhere here. Where we can trigger, there is a volume profile thing in which we have the POC. Okay, so we can take a volume profile, fixed volume profile of the zone, find the POC, a trigger inside the POC. Okay, or we can take the 50%, all the value high and the value lows, and trigger inside the 50%. Okay, or there is a better way to do that. So what about if we know more or less exactly where there is the huge concentration of bearish volume inside this leg? First thing, is better if we have a fair value gap, both in the leg, okay, in the leg that create a value high, and in the leg that create a value low. And the fair value gap, which is inside the leg, the bullish leg, which is this one, and we call it climax, okay, thanks to Richard Wyckoff, must be completely mitigated. What does it mean? It means that if we have a fair value gap, where is the here, the fair value gap of this leg, and we have something like that, and then we have this. All this FVG must be completely covered. Okay, this is not. This is always something that you have to understand from the logic behind the candle. If I see a completed totally mitigate the fair value gap. It means that the power, the bullish power that we have inside the climax, inside this leg, is totally deleted. Is no more valid. Is no more power. There is no more contracts. There is no more buyers. All the buyers that we do have are trapped. Okay, perfect. Instead, if we have a fair value gap on the leg that broke the previous value low, it means the same thing but in our favor. So we have a sufficient bearish pressure. Okay, so we confirm, a fair value gap confirms that we are on a bearish order flow. So we can easily enter on the fair value gap. Yeah, it's true. It's true. Okay, but adding 2 indicators, this will be so much more easier for you. And this is what I do to trigger. Okay, value high, that's why the previous value high, create a structure that broke the value low. We have a fair value gap here inside this leg. Is not a necessary condition, but it will be very good if we cover the previous fair value gap on the climax leg. And I enter here. Stop loss were always above the value high. Why? So not here, not here, not here, not here, here. So above the previous value high. Why? Logic behind this. Because the only way in which we invalidate this order flow bearish structure is above the value high. Sometimes we weak it out. Yeah, okay, it's part of the game. Sometimes market do like this. Okay, we weak it and we go down. Yeah, okay, it's part of the game. Okay. The take profit is on the recent value or the new value low created. Could be this one or could be this one. Okay, so 1 or 2. No matter the risk be careful to the risk to reward ratio. Obviously, if we have like this a risk to reward ratio, nothing at least 1 to 1, 1 to 1.5. Okay, there is no reason by which we have to trigger. Okay, let's move. This is the theory, but it's basically over here. If we have 2 more indicators, everything will be easier. So we are going to backtest the yesterday session. Okay, so we are on the 24. Yeah, okay. London session, no matter bias, no matter time, no matter narrative, which is something that will drastically decrease our profit if you don't know that. Okay, but I will prove to you that you don't, if you need that, if you also add, which is fundamental, if you add narrative, if you have zones, if you have supply and demand, etc., 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 you will be profitable. But without knowing that, let's have the backtest. So for example, the indicators, which is something very useful. So I have 3 indicators: the value highs, value lows by Promokai, which I really I'm very grateful. You already know that. The second indicator is volume suit, but by Leviathan, and I already speak about this indicator. Basically, it's a very good indicator because it shows you the delta buyers and sellers movement, order flow. Okay, so you easily identify the aggression and the absorption, which is something that it's a concept that you have to really understand, because basically this is the market. Okay, so this is the only way to be a rammer of fish, is to be beside the sharks. Okay, and not be ate by them. Okay, but eaten. Sorry, not be eaten by them. Okay, so this is basically my settings. 5 seconds, remember to change this. If you use 15 seconds trigger like me, if you use, for example, 15 minutes, obviously you can have 5 minutes or 1 minute. Okay, obviously everything needs to be back tested. Okay, guys. The large challenge thresholds are the very important settings in which indicator shows you the volume candle, basically. Okay, my candles are totally gray. Okay, no matter if are bullish, if are bearish, no matter. I only want to see this kind of the high volume candle, basically. Okay, with high delta. Last but not least, one good thing that I just discovered on TradingView to really know in which level, in which part of the candle we have to trigger, in which part is the highest concentration of volume, is the lower time frame activity heat map by Luxargo. And these are my settings. 5 seconds as well. No matter all this stuff, I just want to make sure that the yellow, the third box is visible. Okay, because the third box means that show me that the high concentration of volume. Okay, I want to trigger the red bar, the red candle, or the yellow box inside the red candle when I just saw the trigger. Okay, so for example, valid high, valid low, valid high, and we switch down, creating a new structure, breaking this valid low. Okay, so what does it mean? It means that this is our trigger. Okay, our pattern. So this is a particular one. Why? Because we have one fair value gap here and one fair value gap here, which we don't know, okay, at the beginning, because we are here, okay, and so, sorry, no, we are here, and we have our yellow zone to trigger. Okay, so I trigger, when I see this, so I see an unmitigated fair value gap, and that basically works as a magnet, okay, because market tends to mitigate the unmitigated fair value gap. When I see this, I split my size into, so I enter right by now, and another entry could be here. Okay, what about the target? The recent valid low is this one, so the target is here. So take profit here, stop loss here. Obviously it's not good this trade because we have not good risk reward ratio. Okay, so I move, stop loss here, and the second one could be this one, the second entry could be this one. Okay, but this is all I want to do, all I want to know. Okay, we trigger that. Obviously when we already reach our trigger, okay, before blindly enter in the second trade, okay, or the first trade, if we don't trigger before, just pay attention, because market already did what we want for it to do. Okay, so wait for another target, another pattern. So this is first, and the stop loss was right by here. No, sorry, 1 to 1.5 generally. Okay, obviously we are not we have no time to calculate the exact sizing before enter the market, because if we are 15-second time frame, so I usually have a fixed size, okay, and I split in two, so to be very conservative. Okay, I have so many trade during the day, so I don't need to be aggressive because I already have a chance. Okay, so let's wait for another okay, no, we don't have any trigger here. Why? Because this is not a sweep of liquidity, because we have a double equal lows, sorry. Okay, so no matter here. Okay, sorry. Now we have one valid high, valid low, and we broke this valid low. So what does it mean? It means that we can enter here and look what price. So what I told you before. What I tell you before is we have fair value gap. This is ICT call it implied fair value gap, I suppose. Don't remember anyway. So we mitigate this fair value gap. We have a green candle with yellow box, so we enter here. No matter if we close or not. Here we close, okay. But I don't care about closing or not. The break of structure. Okay, don't look for a closing candle. I need just a wick. It's good. Okay. So the recent value low, very high, is this one, which is not good. So I just leave, okay, from 1.5, okay, and we got it. Okay, the stop loss here. Why? Because here. But sorry, it's the same thing. I mean, this is another trigger. Okay, obviously there is a pattern inside the pattern. Okay, so I always take the recent one. So only here this analysis is invalidated, gets invalidated. Okay, so there is no reason for us to get this stop loss, for example, or here. Okay, here we move on. We move on, and then we have our pattern. So 1, 2, 3. Sorry. 1, 2, 3, 4, 5, and 6. Okay. Value low, value high, break of structure. Look at the impulse that we have here. So what does it mean? That we can easily enter here. Stop loss, one tick above the high, and the recent valid low is this one. Okay, and we take it. Once we reach 1-to-1, which is here probably, we can choose if it's good for us to move our stop loss to break even. Okay, but this is something that I do only if on the left we have an important POI, but to be honest. Okay, so sorry. No, yeah, another trade here. As you can see, we have 1, 2, 3, 4. This is another trigger. So look at here. This is very, very important because it happens. So 1, 2, 3, 4, 5, tack. Okay, something like that. Okay, so this is our valid high, and this is valid low. Price did not trigger, did not enter our move, our zone, our yellow zone here. So what we can do here, when the yellow zone is far from here, okay, it's far from our entry, we can choose to enter anyway. Okay, once we close, and to be honest, this is a very good entry because there is no wick here. So 99% of the time when you see a red candle, a green candle like this breaking the structure, you're sure without any wick means that price is going to keep on. It is going to keep the pressure and going up. Okay, so you can enter like this. You can split the size, or you just enter, just wait to be more conservative. Okay, the target is this one, not here, obviously here. So it's another take profit, and we left this zone. Are we going to enter blindly here? We can do if, like here, for example, we broke the recent high, okay, and we keep on going. So basically this is the strategy that we do have, okay, in which we have the supply zone, we broke the supply zone, the demand zone, we keep on creating liquidity here, okay. Now we are going to wait for the price to move back on the 50% and trigger the market, okay. And as you can see, price make a very small reaction, okay. We swap the liquidity, so we were liquidity, price take another liquidity here and go down. So, you know, when we already reach our target, to be honest, I always wait for another confirmation here, and probably in this over here, I will re-enter here. So this to me could be a stop loss, okay. Why I re-enter here? Because we have the same pattern, okay, 1 2 3 inside the good zone. Obviously we already broke the lows. I'm sure that I will trigger this one, but you know, we close below, so market is telling me do not going long here, okay, do not going long, because market is telling you that he wants to go short, okay, no matter when, but he wants to go short. So I will take this as a stop loss, okay. Okay, look at here. You can probably telling me why this is not a trigger. This is not our pattern. The reason is quite simple. This is too big as a zone. Yeah, of course you can enter here. When you broke this low, you can enter here, okay. But you know, I have to take this stop loss. So this trade will take 10 minutes, I don't know, 5 minutes. It's not scalping anymore, okay. So I just want to see a very quick thing, a very quick movement, okay. We are talking about trigger. It's not a strategy, it's a trigger, okay. Move on. Oh, sorry, this is a trigger, this is a pattern, this is what I'm talking about. So now I don't need for me to highlight the price anymore. You see this, but you know, valley high, valley low, valley high, broke the recent valley low. So this is another kind of no, is the same pattern without touching the yellow zone. You know, it's no matter. We know that we are inside a bearish program here, bearish order flow here. So it is just to adapt your size or not, okay. Fair value gap. Just wait for fair value gap to be created and just trigger the fair value gap. Sorry, my mouse needs to be charged. Okay. Just trigger the fair value gap. Okay. So here we don't know that is fair value gap. So we have to wait for the price to reach to touch the zone and go down. The next candle don't do that. Okay, doesn't matter, and just place my order here on the fair value gap. Okay, stop loss here, take profit. Well, okay, so look at here. I told you this before. So now the right target will be this one, the right take profit. Okay, obviously we have to pay very attention of this huge movement in which we already take the fair value gap on the left. This is implied fair value gap. So I'm expecting a reaction inside here. Okay, so targeting this low could be a little bit risky. So we grab, we open the trade, we go down, probably, I don't know. Yeah, we go down. Once price reach the zone, yeah, I just move my stop loss here, okay, because I'm expecting a reaction. I don't know if it's going to react, but you know, this is a clear pattern which price could react. And in fact, it's not reacting, okay. but this is something that I will do. I never move my stop loss to break even. I just move on the recent value high and value lows. Okay. So we have 1, 2, 3, 4, 5. We have 5 TP and 1 stop loss in just 2-3 hours. Okay, London session. Let's move ahead. Let's have a look. Yeah, we do have, but no trigger because the filter that I add to this trigger is this volume suit, and we don't have any red candle here, so nothing to do. But obviously this will be a very good trade. Okay. No, nothing here because we don't have any red candle, we don't have fair value gap, we don't have nothing here. No. Yeah, could be. Okay, so the pattern is this one. We have valid low here, valid high, trigger, swept the valid recent value low, and finally go higher. So the entry will be this one. Okay. Targeting. No, targeting this, and it's a very good trade. Okay. Take me this way. Yeah. Okay. To be honest, I do not. Wouldn't be able to trigger this one, to be honest, because yeah, it's true that we swept this valid low here, but we have this as well to be swept yet. So it's not the trigger. It's not a pattern that in which I will be confident enough. So let's move forward. Okay. 1, 2, 3. Okay, so this will be a good trade, but without green candle, no trigger. So you see the pattern. 1, 2, 3, 4, 5, and we enter. This is good as well because we do have. Where is it? We have 1, 2, 3, 4, and we go down. Okay, so we swept this liquid, this valid high over there. So I will enter here without size. Let me see, where is the recent valid low here? No. I just wait. If we did not reach the target, I wait. So I will enter right by here, stop loss here, and now, yeah, could be good. 1.6. Obviously, we now have this valid low here, which is our target. Okay, because this is a valid low here. But the original take profit is this one. So once we broke this, I will move my stop loss to the recent valid low if the target, if the trade was good, is good. Yeah. Okay, so look at here, we broke this valid low, so I move stop loss here. Okay, so my stop loss will be half. To be honest, you can close a trade. Probably, yeah. Okay, so we have another take profit. Sorry, the original was this one. Okay. Here we have a trigger, but no green candles, no red candles. We already may make our day. Okay. No here, nothing here. It's a pity because it would be a very good trade, but we didn't swap any valid low. Okay, this is another pattern. I will not take a trade here. Why? Because we don't have any fair value gap. Okay, this is very important. Listen carefully. Yeah, it's true. We 1, 2, 3. No, sorry. Whoa. 1, 2, 3, 4, 5, and 6. Okay, yeah, it's true. We swapped this. We broke this valid high, and we swapped this valid low. We have a green candle, yes, of course, but here we have a valid candle. But you know, we have this huge wick in which the yellow zone is inside the wick as well. Okay, so what does it mean? That the huge pressure, if you have a footprint, you can easily see the stuff. Okay, but we have a huge pressure on the wick. What does it mean? That in this area we have a lot of seller pressure. Okay, that will push my price, okay, on the recent supply zone. Okay, so if we have the yellow box inside the wick, be very careful, because it means that the candle that broke the valid high, like here, you know, is not good. We have so much bearish pressure, so we wait for the price to reach the zone. Yeah, could be, but like here, we don't have any clear fair value gap, to be honest. We don't have, you know, there is no a clear bullish pressure, because you know you have always to look to understand the logic behind, always the same concept. Whereas here we have a strong bullish power, here we have a strong bullish power. Okay, so it you know, you can take the trade here. To be honest, I can't see any bullish power. Okay, one, two, three, four. No green candles, so no trade. But remember, we have an unmitigated zone. So as we told you before, when price is going to meet the same zone again, if we have confirmation, probably we can enter again, like here, confirmation. Okay, which is a confirmation, same thing. So we sweat a valid high, sorry, valid low on the lower time frame, and we can go on. Where is our stop loss? Always this one. No matter, no compromise. Okay, and sorry to take. Oh no, sorry. Okay, so the take profit that I will consider is this one. So is the first take profit is this one. Okay, that have already been taken. I just thought that was this one. So if we do not mitigate, if we do not take the target, we can consider entry here if we have a if we have confirmation. But if we already take the lows, the target, sorry, this is a little bit risky. And look from where price has started to push the market down here, in which we have a very strong unmitigated fair value gap. Okay. But this is good. I mean, as you can see, price reacted from the zone very good. So for a quick scalp, it could be good maybe from here. Sorry, look, the same thing. Value lows, value high, value lows, mitigate the value highs. Okay, so this is a stop loss. Okay, this is the stop loss. So what you have to wonder, I could enter here if our next TP is here now, because you know 0.5 risk to reward ratio is not good. So I move stop loss here. Okay. So we have our first stop loss. No trade until 8:30. No trade between 8:25 to 8:40 New York time. No trade from 9:20 to 9:45 London. New York time. Why? Because of the news, because of the manipulation of the opening session, etc., etc., etc. So here, yeah, we have 1, 2, 3, and this is our trade. Okay, stop loss here. They take profit. Whoa, it's too long, too far. So 1.5. No, or maybe here, to be honest. Or maybe here. Anyway, this is break even. Okay, once price is going down too far without any target visible, just move your break even, your stop to break even, and that's it. So yeah, we have another pattern here. What time it is? Okay, it's 9. Okay, so this is 1, 2, 3, broke the value low here. So we do not enter the first time, we just wait for the same further gap here. Perfect, this is the perfect entry. Okay, stop loss here, stop loss, take profit, the recent value high here. Okay, without knowing any bias, any nothing. And it's, to be honest, it's a very lucky day, this one. Okay, I thought not to be so as profitable as this, to be honest, before knowing. I just remember some trade that I do, but I was very comfortable to taking some stop losses. Okay, okay, now it's time to enter. So 1, 2, 3, green candle. Look at okay, yeah, it's good. We can enter here. Okay, stop loss just below, take profit here. Okay, and we finally have our second stop loss. I always wonder where is the mistake, and to be honest, without knowing any structure, obviously, and to be honest, yeah, it could be good as well here, the entry, because we have inside the wick. So I didn't take this trade yesterday. I don't remember this trade because we are inside a very bearish trend. Probably we have a 70 divergent, as I told you in my Discord. So we are on a very, very strong bearish order flow. Okay, no trade, no pattern, no pattern. Ah, yeah, okay, this is the level, I remember. Okay, so now we are moving bullish. Okay, so, you know, we know that we're going to go bullish from yesterday. I remember that. This is not a pattern, a valid pattern to me. Okay, this is not a valid pattern because, you know, this is not a swap liquidity. Okay, so just wait for another pattern to come like this one. Okay, so look at here, we have 1, 2, 3, we swept the valid low and we go down, we go up. This is the trade. The recent valid high is this one. Okay, 1.74, and probably we're going to take it, remember? I don't know. Yeah, okay, and so go home. I want to stop this video here, guys, because, you know, I think you understand the logic behind this method, which is basically my trigger. Okay, is my trigger. Look at here, same thing. Okay, 1, 2, 3, 4, 5. Okay, we broke this high. Okay, we have further gap, green candle, just enter here, stop loss below the valid high, recent valid low, recent valid high here at 1.9. Without knowing anything about the chart. Okay, and that's it. If you add narrative, very important price levels, liquidity session, you know everything. Okay, everything will become much less difficult. Okay, I will never say easy. Okay, so 1, 2, 3. This is another pattern. We don't have any red bars. This as well. Duck. Okay, here. Trigger it like here. Oh no, sorry, like here. Recent low right here. And this will be 1.15 or 1.1. Okay, I will move my stop loss here, to be honest. So this is a stop loss. Okay. And now we turn bullish, but unfortunately we don't have a red a green candle. Doesn't matter. Okay, so I think you understand everything. So guys, I hope you like this video. Let me know what you think about using my conversation below. Subscribe the channel, press the thumbs up button, ring the bell, same old stuff. Join my Discord group, in which I have a small community, but I want to increase it as much as I can. Yeah, that's pretty much it, guys. Enjoy the summer holiday. See you on the, I don't know, probably the last week of August. Okay, thank you guys. Bye.